Jamie Dimon issued some serious caution to investors. Investors took a victory lap last week following a mention of disinflation. That's from Jerome Powell. But JPMorgan CEO Jamie Dimon had issued some serious caution and guidance for those thinking the economy is out of the woods. So investors have been cheering this narrow, that inflation is coming down, that the fight with inflation is nearing an end. According to JPMorgan CEO Jamie Dimon, that's what he said in a wide-ranging interview with Reuters yesterday. He said that we're not quite out of the woods just yet, that it's too soon to be taking a victory lap, and that he expects the Fed to keep raising interest rates to 5%. He even raised the possibility of them pausing assessing the lagging effects and then raising them again to see, what happens with the economy. And he's taking the same view as many Federal Reserve officials, who also have said that we're going about 5% even though markets seem to be ignoring this federal funds. Rates are pricing in rates around current levels at the end of the year. That's of course well above the Fed's long-term target of 2%. CPI came in at 6.5% in the last reading. We have a new reading on Tuesday, and when you think about it, we're not even halfway there when it comes to it. Strategists are saying that the real fight will begin when we get to the 3 to 4% level. So in the arguments between the markets and the Fed, Jamie Dimon's taken the Fed. We know about Jamie Dimon's record as CEO of JP Morgan. He does come out with these pronouncements once in a while. How's his record on those? Has he been right when he says stuff like this? So obviously everyone has their own take. A lot of strategists put out their predictions and they're not always right, and many people might wonder why we should listen to a bank executive when he's not a Fed policymaker. But this time last year he said that the Fed would raise rates by 6 or 7 times at the time. Everyone thought it was only going to be 3 or 4 hikes. Everyone thought it was outrageous, and he ended up being right. We got 7 rate hikes last year, we just got our 8th one. So there's really no reason not to think that he might be right this time around as well. He's also saying the same thing, that Fed officials are safe. There's no reason not to take them for their word right now. So this is a good thing for long-term investors.